Hey guys, it's Eric, Tax Rep Network. How do you do an offer and compromise? How do you compromise away a federal tax debt? Is it voodoo? Is it a secret? Hey, you got to offer at least, take your pick, 30%. I've heard all of this stuff. I've heard, you know what? You have to file an offer during tax season because they're too busy, and this way nobody will really look at it and it'll go through. It's all nonsense. Everything I just told you is bullshit. All right. Excuse my French, but it is. So, how do you do an offer and compromise? The thing you need to understand about the IRS is that it's a formula, right? Now, there are a couple different types of offers and compromise. There's a doubt as to liability offer, doubt as to collectability offer, and something called an effective tax administration offer. Now, a doubt as to liability offer, which we're not really going to get into, it's an offer and compromise, but it's not based on ability to pay. It's based on the fact that we can provide new information. That's critical. New information that proves the taxpayer does not owe what the government thinks they owe. It's almost like a form of audit reconsideration. An effective tax administration offer is an offer where the taxpayer can full pay and does owe the money, but where for public policy reasons, we shouldn't make them pay. One of the most obvious one of these, these are, by the way, effective tax administration offers are very rarely given. They're reviewed by chief counsel. As you can imagine, you have to have really strong facts for the government to walk away from money that it's legitimately owed. So when would the government do this? Well, the cases that I've done this with, I had a taxpayer who was in a terrible accident and is now unable to work. 72 years old. As it turns out, he is going to inherit 500,000. He owes the government 450,000. But we could show that he needed 180,000 based on the life expectancy tables just to cover his expenses. So the government, which could have collected the whole 450 and just left him 50, only collected 320 and let him keep the 180 that we showed he was going to need. So there, public policy is not to put someone on welfare. That's not the government's, that's not the point of the IRS collection effort. It's to collect what they can collect. And there they did consider the fact that they would impoverish this person and he would be unable to pay his necessary allowable expenses. So those aside, the most common type of offer is called a doubt as to collectability offer. And this is where you submit an offer and say, look, IRS, I'm unable to full pay. Would you accept less? And it's a formula. That formula we call reasonable collection potential, or RCP. And there are two parts of this formula. There's assets and there's future income. The assets, generally the government uses the fair market value of the asset multiplied by 80%, which is called quick sale value. All right. In other words, if the taxpayer has to get rid of the asset today, liquidate it today. We can't put it on the market for 3 months and wait. We got to hurry up and move this today. They're going to take the fair market value multiplied by 80%, subtract any loan that's ahead of them, and the net equity and assets left over is what they would include in the offer. So for instance, if you have a home worth 450,000 and you owe the bank 350,000, and the bank, I assume the mortgage is ahead of the IRS lien, the government would say, look, 450,000, okay, 80% quick sale value, we're going to reduce it by 90,000. So 450 is going to become 360, owe the bank 350. They would have $10,000 of equity they would include in the offer. On the income side, they look at the gross income into the household, and then there are allowable expenses that they would reduce that by. Current taxes, there's a standard for food and clothing, a standard for housing, out-of-pocket health care, medical expenses. They would, current taxes, they would get down to what the future income number is, assuming the taxpayer cannot full pay, and that's critical. With the assets and the future income, over the collection statute expiration date, over what's left of the 10-year collection statute, as long as the taxpayer does not show an ability to full pay, they could do an offer and compromise. The government would then want so many months of that future income. Could be 12 months, could be 24, depending on the type of offer you file. That's a topic for a different video. So net equity and assets, the future income. And so that is really how they would calculate RCP, reasonable collection potential. So but there's some caveats we got to get into. Number one, the taxpayer has to be in compliance. What does that mean? It means they have filed the returns that are due and owing, and they are making their current year's payments. So if they're self-employed, they've made their estimated tax payments for this year. If they are an employee, they've had enough withholding done, so they're not going to owe money at the end of the year. So one, they have to be in compliance. And in terms of the returns, if you have a non-filer and they haven't filed in 20 years, the IRS looks to have the last 6 years on file. Okay. Having the last 6 years returns on file puts you in compliance. Now, the taxpayer could file more if they wanted to, but they don't have to. Okay. Why would they want to? Well, maybe they have net operating losses or capital loss carry forwards. You need to file the return to substantiate that. So they could file more if they want to, but they don't have to. So assuming they're in compliance and you can't show an ability to full pay, under 6502, the government has 10 years to collect the debt. Depending on the time remaining on that statute, it's why we pull transcripts. What we would do is we get power of attorney. We use tax help software. We pull the transcripts and we would do the analysis and make sure the taxpayer cannot full pay. If they can't full pay, we can do an offer in compromise. We would calculate the RCP. If it works for the client, go ahead, do an offer and settle that debt. The other thing about offers you need to know about, you have to maintain compliance for 5 years following the offer. Meaning you have to file, you have to pay, okay? You cannot run up another debt or have a penalty. So, it's really critical for taxpayers to kind of, when they're going to do an offer in compromise, kind of get their act together. Now, few little caveats I do want to mention to you. Because of this 5 years of maintaining compliance, you may have a client that is now retired and has no filing requirement. They don't have to file. Tell them to file anyway. Here's why. Because if they don't file, the government doesn't know if they've fallen out of compliance or don't have to file. I've had instances where the government has now issued a notice of default because the taxpayer didn't file returns. We then have to get them filed, showing there's no balance due and there was no filing requirement. But now you're fighting an uphill battle to get the offer reinstated. Path of least resistance is a big thing with me. All right. For the next 5 years, I don't care if you don't have to file. I don't care if the CPA you go to and tells you, no, you don't have to file. Tell them Eric Green said, screw you. I need to file because I did an offer in compromise. And for 5 years, I need to make sure that return goes in so the government knows I'm in compliance. The other thing is, let's say it's now November of the year and your client didn't make their estimated tax payments. Well, can they make them all up now? Yes. Yes, they can. You can have them go on November 15th, let's say, and make 3 quarterly estimated payments. I have them do it online through direct pay, right on the IRS website. It'll be in the computer system at the IRS in 3 days. Here's the thing, though. Let's say your client is supposed to have paid $10,000 in, $2,500 a month, $2,500 a quarter. Don't let them go in November and make one payment for $7,500. Again, path of least resistance. When the offer unit gets their package, the first thing they're going to do is confirm compliance. They have 6 years of returns on file. Okay, good. Have they made their payments? If they see one payment of $7,500, you have to understand something. The IRS does not want your offer. They don't want to take your offer. All right. The offer specialist will do anything they can to get rid of your offer. So they're just going, oh, one payment, not in compliance. They should have had 3, and they simply return the package. I would have the client go on and make 3 $2,500 payments. Looks a little weird, but at least when the offer unit gets it, they go in and they see 3 payments. Now, in the cover letter, I would explain, we got the taxpayer into compliance. They just made all 3 of the missing estimated payments. The 4th one will be made by January 15th, the due date after the close of the year. So again, lesson learned, path of least resistance, make sure those payments show up. Last hint before we go. What if your client has a loss? They're self-employed, they have a loss. They don't have any estimated payments for this year. I have my clients go online and make $50 payments. In November, I'd have them make three $50 payments. Why? Path of least resistance. The person goes in at the offer unit with the offer, looks at the online system. Oh, no estimated payments. I can get rid of this offer. No. I want them to go in and see three $50 payments. Well, that's weird, $50. Now they look at the package and the cover letter and say the taxpayer, you'll note, has a loss for the year. They have no required filing for estimated taxes. However, we want to instill a sort of discipline on the client going forward. So we've had them make three $50 payments to start the process. It's bullshit, but the bottom line is they see three payments. Now at least they have to look through the package and read my letter. By the way, why $50? Well, it costs the government almost $30 just to process any payment you submit. I don't know about you, I pay my tax. So as a tax-paying American, I don't mind the client. I mean, the client's entitled, they can compromise, they have every right to do so. It's legal, and by all means, they should do that. But I don't see any reason why they should pay less, so I underwrite this, right? So I have my clients pay $50, you do what you want to do. But anyway, hopefully now you learned a little bit about how you do an IRS offer and compromise. Look, if this is something you really want to learn, we train people in Tax Rep Network. This isn't a sales pitch for Tax Rep, but if you're really, truly interested in doing this, reach out to us, because you give me 4 hours, I'll teach you how to do an offer and compromise that gets accepted. So I hope you got a lot out of this. I hope now you know a little bit more about offers. If you're a taxpayer, you're a little bit more educated about how offers work. And when you talk to your tax professional, whoever you're working with, you understand how this should work. And so you can gauge whether you have someone who knows what they're doing or not. All right. If you need someone, reach out to us. We can put you into touch with one of our tax rep members who can help you. But otherwise, listen, guys, thanks for checking out the channel. As always, we will include a link to, you can download our ebook on 5 steps to resolve any tax debt. It's free. Go ahead, click on that, go grab that. And I hope you got a lot out of this. And thanks for checking out the channel. Hit like and subscribe, share it, spread the wealth. If you know someone who's got a problem, let's keep the message going. There are going to be a lot of people these days who need help. The IRS is going to be really stretched to help people. So let's do what we can. All right. Thanks.